Today is Thursday, the 18th of June, and coming into the market open today after FOMC yesterday. No real clarity moving forwards, especially based on the fact that Fed Chair Walsh has said that he's removing forward guidance from future meetings and just moving forward in general. So the clarity that I was kind of hoping for after yesterday didn't really come. And in regards to rate cuts or rate hikes, it's actually leaning towards the rate hikes, where 9 out of 18 of the Fed committee have at least one hike this year, and only 1 out of 18 has a cut for the year. So it's looking likely that even though there's no real forward guidance, it's kind of saying that, hey, the Fed's probably going to hike coming into the second half of the year. But despite that, the interest rates stayed the same. So the market did kind of pull back a little bit as a result of that, but it was just, I guess, typical choppy price action around FOMC. But notably, what I'm starting to see now is there was what we spoke about before. There was a clear structural break when the market sold off due to the NFP figures, and it did hold the 50-day moving average quite well. But what we're starting to see now is a bit of a rollover with a lower high, and also the 10-day is well below the 20-day now. So that in itself is a clear market structure shift. There's multiple confluences there. There's the clear sell-off here, which was at the time that was a market structure shift. That was something that was this day in particular on the Friday. That candle, nothing like that on the way up at all. So seeing that close near its lows was definitely a sign of concern, and then the fact that it had follow through and it didn't retrace immediately, another sign of concern. And now on the daily, making a lower high, another sign of concern, and then again with the 10-day coming below the 20-day. So definitely signs of concern coming moving forward, coming into the end of this week. And similarly, the Nasdaq showing the same story. The Dow Jones is again what has been holding up the best, but after yesterday, a bearish engulfing on the daily and not really being able to push much further through to all-time highs. Even though it did make new all-time highs again yesterday, it did obviously pull back and not a strong close at all. The IWM is fairly similar in that sense. It's holding up better than the S&P and Nasdaq, but at the same time, it's not looking great. The VIX did have a bit of a spike yesterday, but for the most part, it's retraced. So based on that, I don't expect volatility really to come back in just yet, but there's definitely signs for it to do so. The dollar index is the big one, and that was a huge push up yesterday, and it makes sense with what the Fed said or what Walsh said about policy moving forwards, and the fact that 9 out of 18 of the committee, like I already said, is pricing in at least one rate hike this year. It makes sense that the dollar index is rallying because of that, and as a result of the dollar doing that, I mean, that's not good for risk assets. And as we can see here, this is a clear resistance level that the price is coming into now, and it's looking like the fact that it's kind of pushing up to that level again in the way that it has. It's a gradual move. It's not just a sudden spike like it did here and then retrace. It's a gradual move. So price is clearly pushing up into this level, and it's only a matter of time before it breaks through, in my opinion. And on top of that, the fact that the higher time frame moving averages have all started to converge with the lower time frame moving averages, and they've started to flatten out. This is textbook in terms of a bottom before a move higher. So the fact that it's came down here, consolidated a bit, price actions confirming that, and this resistance level is being tested, it's in my opinion, it's only a matter of time before price actually starts to push through here and test upper levels, probably the 102 first, and then potentially higher. But yeah, that's definitely not a good sign for risk assets, and obviously it's showing up in equities in major indices as well. So the semiconductor ETF is holding up relatively well for now as well, but again, there's clear choppiness, and the 10 days starting to slope down, and it's just things aren't looking super strong. And the space stocks ETF is all said and done with for the most part. There's the 10 days below the 50, the 20 days sloping down as well, and there's no real sign of relief at all. And it makes sense in regards to SpaceX having the initial strength of the IPO, but on Tuesday that close was really ugly, and the close from yesterday confirmed that actually there's going to be a bit of profit taking coming in now. So the main thing that I'll be watching for is in terms of whether the market wants to continue adding risk, or is actually a time where this is marking the top, will be, I guess, based on what SpaceX does. If SpaceX does fully retrace this move and make new lows, then obviously that's the nail in the coffin, in my opinion, for risk assets at this time. Commodities, no real movement for the most part. There was a bit of a sell-off for gold and silver yesterday, but for the most part, no major moves there. Oil's still coming down, and actually looking like it might have its first close below the 200-day, and again still waiting to come into this level, which it looks absolutely inevitable at this point, this small gap here. Bitcoin did pull back again a little bit yesterday as well, and this 20-day moving average is holding really strongly as resistance for now. At the same time, it is potentially in this place of support and resistance in between the moving averages and this key kind of level here at 64k. So yeah, for now it's looking okay, but at the same time it's clearly having a hard time pushing through this 20-day moving average. So no real bias here, but for the most part, if the dollar index continues to push higher and indices continue to sell off, then I mean it would make sense that Bitcoin does so as well. And actually, the real story is the fact that STRC, so Stretch, which is one of MicroStrategy's perpetual preferred stock offerings, is near all-time lows from the initial price when it came to market, and that is really not a good sign, because basically it's supposed to be at parity at 100, and when it goes above 100 he sells STRC to buy Bitcoin, and when it's below he typically uses cash reserves, or what he said, to sell Bitcoin to bring it back to parity. And the fact that it's so far below now and really not looking good is a clear warning sign, in my opinion, because the fact that Bitcoin's not looking good at the minute anyway, the whole market's looking like it wants to go risk off. It's looking like Salem might actually have to start selling more Bitcoin to bring this, if he actually wants to try and save this. So ultimately that is not a good sign at all, and he actually would be selling below his purchase price as well, so he'd be selling and actually locking in a loss there. So there's a lot of things lining up to see some real volatility to the downside for Bitcoin. So in regards to breadth indicators, they did pull back a fair bit yesterday in terms of this number of stocks above the 20-day moving average. It's quite a big drop, and below the midpoint again. The number of stocks making new monthly highs pulled back slightly yesterday, but on the week, obviously, it's a massive drop from 1,000 of where it started at. And similarly for 52-week highs, has also pulled back nearly 50% from the start of the week. And just to support that, the number of stocks making new 52-week closes is also pushing a little bit higher. So clear sign that weakness is kind of there. What surprised me is, well, actually, no. The saying that there was a pretty solid move yesterday. I thought that there wasn't, but yeah, there clearly was. Okay, yeah. Never mind. 3% on 3% increase on 2 year, and similarly for the 5 year, and not as much on the 10 year, which makes sense. But yeah, the 2 year and 5 year clear push higher, and it's looking like the 2 year actually wants to push and push higher and break out of these levels here. So yeah, all of these signs, everything that's happening right now is showing me and telling me that the market is looking to go risk off, and actually the strength that we had coming into the SpaceX IPO and FOMC isn't actually strength that's here to stay. And just going over Stock B's primary breadth indicators, no real warning signs, but another balanced day, and I guess this strength's kind of worn out fairly quickly, which isn't the best sign. No major news events coming into today. It was just FOMC this week. Fear and greed index pulled back again from 40 down to 32, which is more towards the extreme fear as opposed to neutral. And the number of stocks, or the best performing stocks from the week and the month, is industrials and basic minerals, and really, for the most part, tech is really lagging compared to what it did, and that's what's been leading the market. So the fact that tech's lagging is not a good sign. So clear bias for today is I guess cautiously bearish. I'm not seeing a reason for the market to be bullish here, and based on what bond yields are doing and what the dollar index is doing, it doesn't scream risk onto me. And the fact that it's showing up in market structure as well is a clear warning sign, or multiple warning signs rather. So cautiously bearish coming into today.